Okay, welcome to this presentation. This is called Taking Trades in Context. My name is Michael Valtos. I'm the founder and trader of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. If an investor could potentially lose all or more than the initial investment, risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so this presentation is about taking trades in context. And what do I mean in context? I mean in context of the market. If you're trying to take a trade based on a reversal signal, you need a trend. You need to be at a low if you're buying or at a high if you're selling. All too often people get blinded with with indicators, and it just shoots off a buy or a sell, but they're not taking it in context of what's happening in the market. You can have the best indicator in the world, but if the market is going sideways, going nowhere, then it's not going to be very effective. And that's what I mean by taking trades in context. If you're looking for a reason to buy, ideally you should be buying, somewhere near the low. Or if you're looking for a reason to sell, ideally you should be looking for, a reason to sell somewhere near the high. Now that's not to say you can only buy, when the market's at the low, or sell when it's at the high. But in general, if you have buy signals, I think they're going to be more effective when the market is trading lower in price, or sell signals when it's trading higher in price relative to the day, what's happening in the day. I'll say relative to the value area of the day, but on a basic level, if you're looking to buy, you should be looking to buy below value, somewhere near the lows, or if you're looking to sell, you should be looking to sell somewhere above value near the highs. Of course, on trending days, if you're trying to get short, near the highs, you're going to get your head handed to you as the market keeps making new highs. Or if you're trying to buy near a low and the market's a trending day lower, of course you're going to get shellacked and get pummeled. So again, take things into context. That's why you have to have stops in the market. If the trade's not working out, you got to get out. Perfect. I always say don't get married to a trade. When conditions change, get out of the market. Don't let it. You don't have to let the market go to your stop price every time. When the trade's not working out and you can see it's not working out, get out. So that said, I'm going to talk about this trade here earlier. This is in the Euro stocks. Again, this is June 13th, right off our low here at 2860. You can see, the volume profile here on the side. This is the Orderflows trader software chart. If you could add the volume profile here, I like to look at it. It can oftentimes give me a good signal on, where the value area is. If we're trading below value or above value, it's easy to see. And, we hit this low here at 2860. We put in some volume. You got a divergence, you got a positive delta. It's small, 53 it's not the biggest number in terms of positive delta. But you have what a divergence is when you on a low, you have a positive delta, the bar turns up, and you have a new low. That's what's causing the divergence. Divergence in the strict order flow sense would just be, the new low or equal low with a positive delta. The order flows trader, I take it a step further. I want to see the bar also. I need to see the price action in the bar turn up. Otherwise, what's the point of getting along, taking a buy signal when you got a red candle, a down candle, even though it's got positive delta? I prefer to see, some price action in the bar. Okay, so we hit this low here, we got a positive delta, and then this bar here, you got a stacked buying imbalance, 1, 2, 3, 4 deep. Right off the low. You got the market telling you, hey, this is the low. We just hit this divergence. We had been trading lower negative deltas down in here. All of a sudden you're seeing things change. You're seeing, a positive delta on the low. You're seeing aggressive buying again, a strong positive delta. Here you have a ratio. I'll talk about ratios in other videos, but what is important is you have this stacked buying imbalance right off the low. Take trades in context of the market. So if you're getting long off of an imbalance, a stack buying imbalance, I'd prefer to do it off the low than at the high. And how does it work out? It just goes straight up here. Boom, boom, boom. You know, you can be getting along in this next bar, 28.70. Now it's a quick 10 ticks. Right up to you get to this new high here. You got a ratio, you know, before you start seeing, you know, some solid selling come in. So, you know, when you get these signs like this, you know, take them. I mean, don't wait till you get so far away from it. You can take it as soon as this bar closes. You get in the next bar with you know, plenty of opportunity. You know, this is a 4 range chart. So, you know, this time between this bar and this bar is almost 10 minutes. It's 9 minutes. So you have plenty of opportunity in here to be getting along, you know, anywhere between 60, 66 and 70. You know, and then you could take it all the way up to, you know, the 80 level. So it's a beautiful trade. Take things in context. You know, when you're getting these signals, you know, buying imbalance, stack buying imbalances near the low, you know, that's the place to take them. Or if you have selling imbalances near the high, that's the place to take them. You know, these things, they happen pretty much every day. You know, but you have to be there to watch it. And obviously it helps if you have the order flows trader software. If you have a normal bar chart, you're not going to see these things, unfortunately. You need an order flow chart. Okay, so thanks for watching this quick video. To learn more about the trading software used in this presentation and how you can profit from order flow trading, visit my website, www.orderflows.com. You know, I talk about a lot of different setups on the website. You know, also check out my YouTube channel. I post a lot of videos on different setups. I mean, you know, being a trader is identifying things that are happening in the market. You know, everyone would like to just have, you know, some one indicator that's going to turn their computer into a you know, into a cash machine. But you know, really, that's not trading. You know, trading is being able to read what's happening in the market and understand it and act on it. You know, that's the important thing, is being able to act on what you're seeing in the market. A lot of people are not able to do that. That's why I think, you know, order flows is probably the best way to, you know, approach the market. If you're just looking at the market, you know, on a normal bar chart, you know, it's hard. You know, for example, here, you know, this is a euro US dollar. This is a cash chart. You know, if you're just, you know, looking at it, you can be drawing lines, you know, arbitrary lines. What would you rather do? Would you rather be drawing arbitrary lines, or, you know, have things, you know, have the order flow tell you, you know, this is the price rejector. It's an order flow indicator. Yeah, the order flow indicator is telling me, you know, hey, you know, buying is starting to pick up here. You know, well, this is the price rejector. So what you're seeing is, you know, price below this area is being rejected. We made one last push down here before shooting back up. You know, so you can see, yeah, if you're just drawing, yeah, I could draw trend lines as great as the next person, but I'd rather have something in the order flow telling me that, you know, the market is accepting prices, rejecting prices, or, you know, you've seen a pickup in buying or a pickup in selling. Those are, you know, that's what trading is. You know, yeah, I like to have indicators, and my indicators are more of things to whack me upside the head. Said, hey, idiot, don't miss this here. You know, mine is, it's not some, you know, black box mythological, you know, some black box thing that makes no sense, that just distorts the numbers or takes price and, you know, massages it through a bunch of mathematical equations. You know, it doesn't. It reads the order flow for me. You know, this is, you know, I've come up with the price rejector. I've got another one called the Delta Scalper, which analyzes the order flow for me so that I could just run it on multiple charts, you know, multiple time frames. Yeah, this is a 5 minute chart. You know, for example, I got this other one here real quick. This is the Delta Scalper. You know, it's telling me, you know, things are changing here in the market. You know, this is, you know, would you like to be buying it somewhere down here, you know, around the 50 area? You know, we're trading all the way up to, you know, even I'll say up here, but, you know, at least up to the 60, 65, you know, somewhere in here. That's a nice move, you know, and that's what, you know, we've developed with the order flows trader, the Delta Scalper, and the price rejector. So again, you know, visit my website. You can learn more all about this and stuff on the website, www.orderflows.com. You know, this is the website again here, www.orderflows.com. Thanks again for watching this video. Bye-bye.